some good news. Now is going to be a right time to buy, especially for those people that are in the median class income. CalFHA, Dream for All Shared Appreciation Loan Program, that's going to be a 20% down payment for closing costs, as well as for down payment assistance. This is going to be something huge, for those individuals that or actually will shut it out of buying a house, because buying a house is a big step, and the way that the interest rate is and the market has been so volatile. A lot of people were hesitant about hey, should I be a right time to buy? Is this something that's right for me? But right now, CalFHA is going to be leading the way, with this equity builder program here, which is the Dream for All Shared Appreciation Loan Program. And what I got is the details of this program, but just want to let everyone know that the guidelines have not been released, even though this program will be available March 27th. I am anticipating that I will have this available as a loan officer to offer it, for those individuals that are a first-time home buyer and that are looking to, have some home ownership and, being able to, get, a little bit of equity, as well as, having, a home and, being able to pursue their dreams of having a home ownership, because that is the way that, we're going to be able to create generational wealth, is, by owning your home. But without further ado, let me go ahead and present, what I have today, which is going to be the CalFHA program here. And, with this program here, let's go down to the first one here. Yeah. So the Dream for All, there we go. The Dream for All program, the overview. Let's pause it there. There we go. The Dream for All, the background, the overview. So in 2021, there was an AB 140, which empowered the California State Treasury Office to develop a framework for the California Dream for All program that makes home ownership more affordable to low and moderate income Californians. So in May of 2022, Senate President Pro Tem Tony Atkins proposed a budget appropriation to fund the program. In June of 22, the governor established a program through the state budget, and CalFHA tasked with development, implementation, and sustainability. The Dream for All is a revolving shared appreciation loan program that provides loans for a down payment upon the sale or transfer of the home. The home buyer repays the original down payment loan plus a share of the appreciation in the value of the home. So here's an example. The Dream for All Fund provides a loan for 20% of the home purchase price. The homeowner pays back the original loan amount, plus they give up 20% of the equity or the appreciation in the value of your home. So you get a 20% assistance for either the down payment and the closing costs, as well as when you do sell the home, you also give up 20% equity or appreciation of the value that the home has increased, as well as pay back the loan. And I know some of those, it might not be for everyone, but for those that are looking to, get into a home, and, because renting, you're paying someone else's mortgage, and you can pretty much pay your own mortgage. And so they're making this available, through all of for all Californians. The typical feature of the shared appreciation loan is a subordinate second mortgage. So basically what it is the down payment is going to be a second mortgage. And also, just to be expected that every year, whatever the loan amount is, just like the other down payment assistance program, you will get a 1099-G. A 1099-G is going to be, you're going to pay taxes on that. So you're going to have to consult with your tax advisor and your tax preparer, because $20,000 most likely will be split up into, maybe 3-4 years or whatever the case is that they will go ahead and roll out the guidelines on. And so, these are some of the things that you want to consider, when you do get this, when you do apply for this program, that insistence in that income that you receive is going to be a taxable income. The down payment and closing, you can use it for down payment and closing cost assistance. The home buyer does not make payments until they sell, refinance, or transfer the property. And the effective interest rate on the shared appreciation loan is equal to the average annual appreciation in the home value. The program requirements include the shared appreciation loan feature expands access to home ownership by helping low and moderate income home buyers purchasing owner-occupied homes. Ensures design of the loan product is not unreasonably impeded to wealth creation. This will be a conventional loan product. So, there's a lot of sellers out there that will not deal with FHA loan products, but this is going to most likely be a conventional conforming loan product. Explore selling subordinate second mortgages to investors. Must be paired with a CalHFA first mortgage, and adequate consumer protection and disclosure. So you will also have to do a home buyer's education course, which is $99. And the home value, as an example, the DFA loan of $100,000 plus the first mortgage loan of $400,000, it gives you a home value of $500,000. 5 years later, the home value is appreciated to $640,000. Your home price appreciation is $140,000. The homeowner share of the appreciation is $112,000, and the down payment assistance share appreciation is $28,000. The homeowner sells the home, and the DFA loan payback is $128,000 plus the homeowner's equity of $142,000 plus the first mortgage balance of $307,000, and then the home is sold. Homeowner's equity of $142,000, and you can go ahead and look at the presentation of what the homeowner share of appreciation is and the first mortgage of the down payment there. These are all examples. The first mortgage between the homeowner's equity and how the DFA recycles the funds and pass it on to the next person. So this is what continually funds the program and makes it allows them to pay it forward for other individuals to apply for the California Dream Fund Equity Appreciation Program. So the implementation and the goals is to increase access to home ownership for low and moderate income Californians, provides opportunity for wealth accumulation through home ownership, minimize financial risk to the consumer, state, and agencies, and ensures recyclability of funds so that more Californians can receive assistance, embedded significant consumer education outreach, and ensure long-term operational and administrative viability. And so, that is the, outline of what, the California program would be. And so, a lot of individuals, they don't really know, the ins and outs of, what that program is going to be. But, I'm going to tell you that, from my experience, that, you're going to have at least a 640 credit score. And so, that 640 to 660 credit score, you're going to be able to also have at least to put down 3% for the first mortgage, in which the base of the loan, it cannot exceed, you can't go out and find a home greater than $726,200, which, is conforming loan balance. There, also as well, that you're going to also have to probably consider the median area income. And what that means is that, who's going to qualify, how you're going to qualify. Most likely you're going to use the Fannie Mae area median income, which is going to be 80% AMI. So what you're going to have to do is divide that limit by 12 months. And then you also got to look at the DTI cannot exceed 45%. And so what that means is you have to have less than 58,000, make less than 58,320 on a W-2. Even though that the Fresno, annual the income limit is I believe it's $130,000, somewhere around there, where you can't exceed that. But on W-2 purposes, or 159,000. So the government and conventional income limits for the Fresno County was 159,000. But however, your W-2 income and who qualifies, is going to most likely be at 58,320. That is what 80% AMI is on a Fannie Mae tool lookup. And so that gives you $4,860 per month. You're going to multiply that by 45%, and that's going to give you $2,187. That is going to have to be your mortgage payment. That is going to include your interest, principal, property tax, and PMI. And so, you're going to be limited on what your mortgage payment can be. And that's kind of why it's designed, the program guidelines haven't been released yet, but it's going to basically determine borrower's capacity and ability to make interest payments and repayments on a loan using his or her disposable income and cash flow. The California Dream for All Shared Appreciation Program guidelines, once again, has not been released to our lenders for approval. And this video is for informational, educational purposes, and is not intended and is not endorsed by CalHFA. This is going to be brought to you by MKG Enterprises Corp Mortgage Broker, NLMS 1370394. We're equal opportunity lender. If you'd like to learn more about our DPA program, visit us on our website at mkgenterprisescorp.com or give me a call at 559-337-5990.